Good morning, all. Welcome to the morning podcast with me, Sudeep Shah. In today's podcast, we would be discussing about what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We will also be discussing on key sectors and stocks that we should be focusing on for the day as well as for the next few sessions amidst this ongoing geopolitical crisis. Now, we have been seeing an unforeseen conflict between Israel and Palestinian militant group Hamas, which started over the weekend. And generally, there is always an ongoing conflict in that region, but this time the intensity is different, with Israel officially declaring war. And these geopolitical tensions have led to the Brent crude oil prices rise sharply to trade over 87 $88 a barrel. And more than getting directly impacted by the war, India is getting impacted by the impact of rising crude prices that this war is having. So, and just to add to this, the fear in the market could also be gauged by the rise in India VIX, which rose over 10% for the day today. Till now, the global markets have not been adversely reacting in a big way to this news, but definitely this news flow over the next few days will be extremely important from a directional perspective. And hence, I feel it's extremely important to avoid over leverage positions as the moves both sides will be very wild. So coming to trade, yesterday Nifty and Bank Nifty both post a gap down opening witnessed an initial signs of recovery. However, this recovery was short lived, and from higher levels we saw some kind of selling pressure re-emerging in the second half. And finally, Nifty ended the day with a cut of 0.7%, while Bank Nifty lost 1% for the day. Now, second day in a row, we saw mid cap and the small cap indices underperforming the broader markets, and both the indices closed with almost a loss of 1.5 to 1.7% for the day. Now, coming to index levels, going forward with this continuing dynamic geopolitical environment, we feel that we could be in for some kind of a higher volatility. And major resistance now for the Nifty could be around 19650 to 19680 on the upside, where the 20-day exponential moving average is placed. And I feel that it's crucial that for this level to cross for a short covering move up to 19830 19850 zone. So all in all, 19650 19700 zone would be the most important number to watch out for. On the downside, indices could get support around this zone of 19400 19430. And remember, this was one of the most important levels on the way up in the month of August, while the markets were trying to take support at 19200 19250 and try and rebound from those levels. So now that resistance will become an important support on the way down, and in case we see a breach of 19410 on the downside, acceleration of this profit booking move up to 19330 19280 cannot be ruled out. Now let's have a look at the option chain. Now significant put writing is visible in 19500 and 19400 strikes, while on the calls front 19600 and 19650 calls are holding a significant share of open interest built up. So we feel overall for the day the range could be 19400 on the downside and 19620 on the upside, with a flat to negative bias. Coming to Bank Nifty, we feel key support for this index now lies at around 43600 43700 zone, where the swing lows for the August month is placed. And we feel that this is an extremely crucial zone, and we should be carefully eyeing this number of 43600 on the downside as an important support. Now, any move below 43600 could lead to an acceleration of this profit booking move up to 43200 43000 on the downside. Now, key resistance on the way up could be around 44200 44250, and only on a sustenance above this zone of 44250 we feel that index could witness a short covering move up to 44500. Now, tracking the option chain, 44,000 calls are having the highest open interest, and on the put side 44,000 puts, 43,900 43,800, all strike prices are having significant open interest built up. So this makes this zone, adjusting this premium, in fact this makes this zone of 43,600 43,650 a crucial support. And on the upside, 44,200 to 44,250 will act as a important resistance from here on. Now coming to stock specific and sector specific moves, not many stocks were showing positive traction, and positive chart setup was limited only to a few stocks such as Tata Consumer and L&T amongst the large caps, and within the mid caps Oro Pharma, LTTS, Oil India. So not much action except these 4 or 5 stocks that were looking good yesterday. So let's just see what the FII data has in store for us. FIIs have been net sellers in the cash segment to the tune of almost 1,000 crores, while DIIs have supported the markets, being buyers to the tune of 2660 crores. FII's long short ratio for index futures is at 26-27%, and they've sold 3,500 additional index future contracts yesterday, which is extremely negative. In the stock futures segment, FIIs have sold closer to 4,225 contracts. While talking about the options, FIIs have squared off 15,680 call option contracts, and they've even sold 15,400 contracts of index put options. So generally what we feel is that they are on a sell mode. They are trying to create short positions at higher levels, and this is quite evident from the FII's long short ratio for index futures. So for me, this would remain the key. This number I've been mentioning over the last many morning podcasts, that FII's long short ratio for the index futures will remain the key until the time we don't see an improvement in this ratio beyond 35-38%. Indices could witness selling pressure on rises. So just to summarize, with the situation being too fluid, we need to keep an eye on the ongoing geopolitical development, which could have a larger impact on the crude prices and India VIX. And key support for the Nifty would be around 19,400, 19,430, and the resistance would be around 19,650 to 19,700. While for Bank Nifty, the key supports would be around 43,600 to 43,650, and resistance would be around 44,200 to 44,250 zone. So friends, that's all for today. Thank you all for regularly listening to our podcast, and wishing you all an energetic day ahead. So do tune in tomorrow for more market related updates and insights. Thank you all.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.